I'm Leandro Noel, one of the founders of Avenia, and it's a pleasure to be here. And the idea is to pass the next few minutes making a case that is quite unappreciated so far. Basically, many people still see stablecoins as a payment method, but what we are seeing is more of a platform shift. And lots of starting with the market here. Basically, Latin America is leading the growth in terms of the adoption of stablecoins up to now. We are born in the country of PIX, which is the global benchmark for the real-time payments. And up to now, the stablecoins were solving for consumer finance with the dollar access. But for enterprises to come, there is still a few pending issues. The two main things that we see here is regulation and abstraction. And for that to happen, for enterprise to come, we need to solve that. Basically, in the stablecoins were not illegal, but they were kind of a gray area, and most companies are still averse for not real clear frameworks. Basically, in Europe, we have the MiCA system. In the US, we will have the building of upon the Genius Act. In Brazil, we just had the central bank putting into force the regulatory framework for VASPs. So basically what we're seeing is that the regulatory coming from a blocker to more of an accelerator. And on the abstraction, we always thought that the great tech is invisible. So basically what we have, like issuing the BRLA, which is today the largest stablecoin for the Brazilian real, we see that many people ask what is the use case for a local stablecoin when you have PIX, which is so efficient. And what we see is that it's a proxy for accounts. So it's the anticipation of what the future will be. So what we have as an analogy here is that if you look into Brazil, there is plenty of types of accounts. You have checking accounts, investment accounts, savings accounts, non-resident accounts. And in this future with stablecoins as the default technological platform, all these types of accounts will become wallets. The same goes for payment methods. In Brazil, have TED, Boleto, PIX, SWIFT. We will all become a function called transfer. And basically, seeing this as a proper platform shift will help us to make the end-to-end use cases with invisible technology for companies to adopt. So basically, with this, we have been building a system that compounds. So the last few months were about doing tens of thousands of transactions every day. And this is on a system that can handle both like large amounts, transactions of large amounts, like an international enterprise that is paying for an M&A transaction, but also coming from like fintechs that is doing retail payments and B2C focused crypto trading or tourism use cases, and tens of thousands of transactions with millions in terms of single transactions are very interesting, a challenge that is very interesting to create too. We also think that having the local stablecoins are very relevant in terms of where the world is heading. Although the dollars are already dominated by the USDC, USDT, the local markets are still pending for which is the winners, and having like billions transacted every month upon a token that we launched like 2 years ago is very interesting to see, and having the network effects around it, it's something that we really think that can be a moat on the long run, besides all the regulatory orientation and the abstraction line of thinking. So basically, this is the main case that I want to make. Like all financial products will be built on these rails. So with the accounts becoming wallets, the payment methods becoming transfers, like for credit products, the unlocking, the collateral management will become a programmable locking and unlocking of tokens. And also, like we spoke a lot about AI here, and for agents in general to transact, they cannot call a bank or fill a wire form, but they can call a function. So in this future, with this technology, it's the only way that makes not the financial products global by default, but also machine accessible by default too. So yeah, basically what we do here is serving financial infrastructure for companies to build financial products. Companies in the whole world want to have this monetization coming from financial revenue streams. And we are building this for the Brazil at first, but going to Latam and eventually becoming more of a multi-country with both, not only with the technology, but also the regulatory infrastructure and the liquidity management for our partners to rely on. So yeah, if any of this resonates with what you're doing, if you want to grow in the region, in Brazil and Latam, I'd love to help. This is what we are doing in Avenia. So thank you so much.